and we're going to get started right away because there's a lot to talk about. First off, many of you have gotten an email invitation. Thank you for coming tonight. It's a two-part event. Tonight we're talking about seasonalities and sectors. I want to talk about what's happening towards the end of what we're supposedly supposed to go through in October, number one. I want to find out what stocks, what sectors, what commodities have actually been adhering to their typical supply-demand functions from a seasonal perspective. In addition, we're going to talk about some of our favorite technical confirming indicators, and many of you may think we're going to talk about Person's pivots and the momentum indicator, PPS. Actually, we're going to talk about some other indicators as well that helps us to quantify the strength or weakness of the markets, market internal analysis, as well as in some volume studies. So with that said, I think many of you have come to visit us before, and this next week we have a few earnings coming out. We have a big jobs number coming out on Friday the 2nd of November. That's a week from tomorrow. And the reason that's important is we just concluded the FOMC meeting, and Ben Bernanke offered his genuineness of adding more liquidity through beyond 2015 or in the middle of 2015. And it's interesting to note because the last jobless report, or the unemployment report that we had, showed that all of a sudden, that we had a miraculous cure in the amount of people going back to work. We've had coincidentally, right going into the election, we've had this miraculous decline in energy prices, at least crude oil, and people are talking about the price at the pumps. So it's going to be interesting to see how this jobs number comes out on Friday, because it's, of course, right before the U.S. presidential election. So we have literally a week and about 3 trading days until the elections, and then we have to see what's going to happen for the rest of the year. Are the markets going to adhere? Which ones typically adhere to their seasonal strengths? And what types of trades can we be looking at? And it's not just your typical markets that we're going to take a look at tonight and as well on Tuesday. In addition, I'd like to invite everybody to join us, because next week, remember, we're doing one tonight. It's being recorded for those who can't join us or because of the time zone differences. As well, on Tuesday morning, we're doing one. So we're going to extend an invitation as an open house to come join us to see, A, how do our indicators kind of work? How are we putting what we're going to be talking about tonight and Tuesday into practice? What type of strategies can we do? Many of you may receive my tweets. I generally have been putting out some pretty quality tweets. We talked several times about last month about doing some credit call spreads in the diamonds before the market went down. We did some debit spreads in GLD, put spreads, that is. We bought the 172, 170, did what's called a bear put spread. A lot of the trades that we put on are seasonals. We did have a bad trade in sugar. Not everything's perfect around here. But nonetheless, I think that we like to look at trades that have high probabilities and are kind of flowing with their seasonalities, and then take it and then see how can we apply our risk capital to the best degree, both in how much money it takes to work, to put down, as well as what our risk to outcome can be. So with that said, I'm very excited to present tonight, because it's really surprising a lot of stuff that's coming out, as well as new developments. We use, many of you may know, we're going to be using the charts from Genesis Trade Navigator software. So here it is. Tonight, our outline, we're going to talk about seasonal market analysis. I'm going to talk about stock and sector analysis and a market outlook before and after the election. So one of the things that I'd like to make a disclosure about seasonal analysis, many people, for whatever reason, people forget about seasonal analysis, or perhaps it just didn't work for them one time. So there might be, on average, over the history, if you plan to be a career trader, I'm not talking about maybe trading every day, day in and day out, quitting your day job, but if you are a professional trader, great. You still need to understand that not every year, not all years are created equal. And some years there are going to be events that can alter the timing of a particular supply and demand function on a market, which will influence pricing. It will also, on that pricing, either mute or magnify a particular move. Case in point, weather, such as a drought. Typically, we see peaks in the grain complex, especially in soybeans, towards the middle of July. But with this year's horrific drought, we saw prices do what called a counter-seasonal trend move, where instead of going down, they went up. So there's a lot of times that we see counter-seasonal trends that may take place in one year. Unfortunately, for novice and new traders, they look at seasonal analysis, they do it the first time, they say, this stuff doesn't work, and then they move on. Or more importantly, maybe you did a trade last year, and if you're like me, you don't remember what you had for dinner 2 nights ago, let alone what you had for dinner last night. You're not going to really remember what happened the year before in the markets. That's why we use technical analysis, and helps us to understand, is there a reasonable path or a reasonable trend or pattern in the marketplace. And quite frankly, there is in most of the markets. And one of the greatest things about using seasonal analysis is it helps alert us way before impending market moves. I mean, we talk about many trading opportunities, and I might be ahead of my time because I'm trying to prepare and get a gauge on what's the best place to put my money. Should I be in a derivative? Can I look at an option strategy? Or maybe perhaps look at a peripheral market. For example, instead of doing the commodity, I'll do an exchange traded fund. So instead of trading gold, for example, I might trade GLD, the ETF, and do an option strategy on the ETF, which is in gold's situation, GLD. In addition to that, I might even take a subsector market like gold miners and trade off the GDX. So there are different ways that I could trade the market, and I just need to be at least in tune to what types of events are coming up. So first off, I think everyone understands that next week, for example, we do have the unemployment report, we have some special economic numbers coming out, and then of course we have the presidential election here, which everyone is really, I don't know if you're like me, but looking for at least these commercials to change eventually. But in any event, one of the things that we need to look at is to analyze seasonal events that create actual supply and demand function. For example, we're coming up on the holidays. So, you know, while we're focused on the here and the now and maybe focused on getting the kids ready for Halloween or maybe getting yourself ready for Halloween. Oh, and by the way, for those who don't know, Halloween's next week, Wednesday. Also, medical needs. There's something that happens in the wintertime, cold and flu season. And actually, I believe it's January is peak cold and flu season. So that would maybe increase the need for cough, cold medicines, trips to your local Walgreens or CVS pharmacies, for example. Transportation needs change. You might see an increase in winter vacations. So some people start looking at airline stocks. People start flying, going on winter vacations. Financial transactions take place. Why? Because we're coming to a year-end changeover. Agricultural food needs change. We come through the harvest time for our nation's grains. Energy demands. Energy kind of switches, doesn't it? We switch from actually from a summertime higher restricted gasoline, reformulated blend gasoline, to a more or higher sulfur content winter blend. So even energy demands can see changes. We see probably a switchover in demand for natural gas versus crude oil. Technology releases, upgrades, et cetera, et cetera. And of course, right now, political changes are on the horizon. So this is in the fourth quarter. Right now, these are some of the things that come up into, as you can see, there's a lot, and I'm sure I left a few things out, but just off the top of my head, these are some of the things that we come into the October, November, December timeframe, or the fourth quarter. So let's take a look at the seasonal chart. Stocks, typically what we've seen and is that on or about during the third week of the month, we see bottoms. Markets kind of get a little bit of rally. But like last year, if you recall, November was kind of rough and rocky. And it really, as you see, we bottom in October, but that doesn't mean we go straight up. So there are certain things that we got to look at the broad market. There's one other element that maybe people aren't really talking about right now, and it's the January effect. Maybe people may have forgotten about this. And what I wanted to share with you, this is what we call a spread chart. Us commodity traders call the upper quadrant of this is simply a spread chart comparing the IWM, which is the exchange traded fund off of the Russell 2000 versus the spiders, which is the S&P 500. So we're comparing the small cap Russell 2000 versus the S&P 500. So some people might call, stock traders would call it a pairs trade. Some people might call this comparative analysis or a relative strength chart. In fact, we just did a refresher for our students, our Trading Trigger University students the other day. And the funny thing is, I forgot to even mention, I think I forgot to mention the January effect comes into play right about now. What's interesting, this chart I took approximately an hour ago to prepare for this presentation. The bottom quadrant is actually a seasonal trend on this spread. It was a little complex, but it shows that typically you see this spread actually bottoming out towards the end of September into, as it trades and bottoms out into October. Now, some years we see the small cap start to outperform the larger cap, and that trade will start. It used to start as it says the January effect, and every year it's gotten a little bit early. But you can see the trend as this seasonal trend starts to bottom out in September, October, and moves up going into January. People start to put money to work in the small cap sector. So with that said, I would like to take a look at the overall Russell and look at the health of the market and have you take a look at this chart here. What we'll talk about on Tuesday, some of my favorite technical tools, and what we do here is we've actually taken an advanced decline comparative ratio line, and that's what you're looking here in this purple in the middle quadrant. It says ADC, Advanced Decline Comparative Ratio, on the Russell, RT. So most people take a look at the advanced decline line based on the NYSE, the New York Stock Exchange Composite Index. Well, if we're taking a look at each individual stock sector, whether it's the S&Ps, the Dow, the Qs, or the NASDAQ 100, or the Russell, or the New York Stock Exchange Composite Index, or the NASDAQ Composite Index, we can look at each individual one of these indexes and dissect from a perspective of whether the composite stocks within the index are going up or down. And so that'll give us a gauge whether or not the actual index is being manipulated by a few stocks, since most of the index we trade are capitalized weighted index, which means a few stocks can actually move the major direction of the index. It's important to see if the stock index goes up. There's three things that we want to look at that's kind of neat with using analysis for the stock market. A, what is the overall, what we call the breadth of the market? What's the overall stocks within that index doing? Are most of the stocks going up when the index goes up? Because if it is, that's a healthy sign. If a lot of stocks participate in the rally, that's a healthy sign. If the index goes up, but not a lot of stocks within the index goes up, that's not a healthy sign. Inversely, if the stock market goes down in price, if the index goes down in price, if the majority of stocks is not participating in that price decline or sell-off, then that's actually a very bullish sign. The next component we want to look at is the market, when it goes up, does it go up on strong volume? And when it goes down, is it on weak or strong volume on the decline? If a price goes down in the index, but it's not accompanied by heavy volume, then it's probably not a significant decline or a long-lasting decline, or in other words, it's not as bearish as the naked eye might perceive it to be. So there are ways to measure that we look at to measuring the health and breadth of a stock market. And with the Russell, as you can see this year, and I've got the Russell 2000 here, we didn't take out the yearly highs like we did in the NASDAQ, and I'll show you that right here. All right, so with the NASDAQ, we made newer highs. The funny thing is that the NASDAQ, as we made newer highs in the index this year, the majority of stocks did not participate in that rally. So this rally was suspect. It was just a matter of when it was going to go down. So when we take a look at the seasonal analysis, the seasonal aspect, will the small cap outperform its brethren large cap sector? Let's take a look at the S&Ps real quick. You'll notice that within the S&Ps, we actually, interestingly enough, we made in the S&Ps a newer yearly high, whereas remember, the Russell did not. But with the S&Ps, it actually made a new yearly high with market participation. So stocks went up alongside the S&Ps. So that leads me to the next question. As the market rallied, did it do so with an accelerated volume? And it did to a degree until we got into September. And then as we started to chop around, the volume started to taper off. Now we have to ask ourselves, this decline, and on the John Person indicators, JP indicators here, the PPS indicators, you'll notice that while the S&Ps, and I'm just going to be straight with you, every index has generated from 2 weeks ago a weekly sell signal. And as you can see, even last week where we took a newer high, on Friday, on option expiration Friday, the market just gave it all back and some, and now we've had follow through the downside. So the question we want to ask ourselves, or need to ask ourselves, is this the end of the world as we know it today? Is there a incredible, significant decline coming in the market, or is the market getting posed, or is it capable of making a breakout to a new leg to the upside? So I'm not sure if anyone wants me to answer any of those questions. But if you do, I can certainly at least share with you that in the last 3 weeks that we've seen the market decline, and again, this is a weekly chart, so it's going to be important to see how the week ends tomorrow, okay? Considering the fact that we're at 1403 in the market, 1403 and 3/4 to be exact in the S&Ps, the advanced decline does not show as we've seen, and I'm going to highlight this for you, kind of interesting. Amazon kind of missed, their profit margins narrowed a bit, and of course you've probably heard by now, Apple sort of missed. Interesting, because we had a target on Apple, and we did this in our trading room. We've been talking about, we had a little discussion about Apple, had a price objective from a head and shoulders top measurement and a descending triangle that we talked about today in our trading room. And I'm not sure how many people in the room, we had a few people in the room today, and I gave this number out. 585 was the measuring objective in the trading room today. Interestingly enough, in the overnight session, it was 585.10 was the exact low. I don't know if anyone saw that, but it touched it. Yeah, and it didn't last there long. I actually tweeted that by the time I finished typing the tweet, I think the market snapped right back again, so or at least back over 600. It was a short-lived move, but the measured objective was achieved. So we're going to get into that in just a minute. So here we go, and we talk about this descent. And if let's say today, Thursday night, was actually Friday, the close, I would look at this and say, gee, here we have lower prices, and I'm sure everyone can see this and would agree. Yes, John, it's obvious. It's painfully obvious. The market made lower lows. But it's interesting that as price made lower lows, it did not come with an accompanied lower decline in the advanced decline line. In other words, not all stocks are participating in this price decline. The next thing I want to kind of point out is, gee, if the market's making newer lows, then why is the decline on light volume? So to me, that's kind of suspect. So in the S&Ps, while we are up on the year right now, approximately, what are we at, 12% or so on the year, the question is there further room to the downside? And yes, we could see another week or so of decline in the market, and it wouldn't surprise me. The first area of support resistance will be probably as we come in to this old area, old resistance support. If you take a look at these old highs, these old lows, near this old high area, the market finally broke out, and it's going to come back and it's going to test. It's right around 1380 area, all right, because it's not an exact science. I want to see at the end of tomorrow, Friday, on the close, where the market, A, closes, if it closes lower, if it closes off its lows, and B, I want to see, more importantly, what the volume action did to support the move, and B, I want to see what the accumulation of stocks up or down was. So to me, that's kind of a very important, significant role of looking at these market analysis tools. Now, when we take a look at the Russell, for example, since the Russell didn't really appreciate significantly or take newer highs, the beginning of the conversation was, is there a chance that the Russell or the January effect will continue? We're not looking to see the overall stock market crash and burn, but if it does, will people put money to work more in the small cap sector than they will the blue chip? Will people be taking money off the blue chip? And if there is some profit taking, we would be looking at potentially the small cap outperforming one way or another than the large cap, if that makes sense. And that's what this chart shows. In fact, if you notice, if you take a look at this spread chart, the Russell has, since the beginning of October, started to outperform the S&Ps. So even though both indexes are going down, it's the Russell that's not going down as much. So therefore, when we take a look at the seasonal trend, typically this is the exact same price action that we do see on a year-over-year basis. So traders can look at a particular trade, and one of the things we're going to talk about in the room next week and also Tuesday morning is to see if there's opportunities going in for an options position or a pairs trade going long the small cap versus short the S&Ps or blue chips. Now, crude oil. You know, it's interesting, I made this, I don't know if you detected a little bit of sarcasm in my voice when I said, you know, it's a coincidence that we saw crude oil go down into the president election. Well, actually, typically we see a normal year, prices in crude oil peaks out in late August, early September, and goes down into December. The best time of the year actually to buy in the energy oil, crude oil sector is actually in February. So it chops around from December through February in about a six-week period of time. So bottom line, we could be looking at this weakness here. Crude oil weakness in October, it's not only a prevalent trend that occurs year over year. It's not really something that has a lot to do. It's a coincidence that it's a presidential election year, but typically crude oil declines this time of year. Unlike if you take a look at another market, natural gas, it's quite the opposite. Natural gas, I don't know if anyone's been really talking about natural gas. It's not really going anywhere, but it's not dropping anymore. And natural gas typically sees a bottom from September going into about the time that crude oil peaks, bottoms out, natural gas peaks out. So we are seeing some strength going into natural gas, but as you can tell, we're just coming out of October, and we see a little bit of a decline, and then we see one more push going up into the early to mid-December. So natural gas and natural gas-like product sector stocks should see a little bit of pullback in the next week or so, and then we see one more surge, typically from a seasonal perspective. So this is something I think that looking at the different sectors and markets, I have to ask myself as a trader, with all the commotion and all the worries about the stock market and looking at individual stocks, I think it's important to take a step back, look at the bigger picture, and ask ourselves, hey, are their markets really adhering to their seasonal tendencies? And I think that's one of the things that, I don't know if everyone pays attention to this stuff, but it's important that if you don't realize that, gee, this is something that happens every year, one of my favorite phrases is a market that's in gear or is in sync with its typical seasonal tendency tends to remain in its seasonal tendency trends going forward. What that means is that if crude oil, and so we could take a quick look at crude oil right now. And crude oil, from a seasonal perspective, we typically see the market peak out, and on a weekly chart, as we can get through here, the trend typically declines going into, as I've showed you with the chart, going into about the middle of December. So from here, we have a trend, a market that is in a weekly sell mode, and it typically does go down. The question is, how much further can we see crude oil move in the coming weeks ahead? After all, if a market is in, and this market, it typically goes down, it moves sideways, then it goes up. As you can see, the trend goes up, right? And then we kind of go sideways, down a little bit, then the market rallies a little bit, and this year it did, and then we start that decline again. So the typical move of crude oil, it has been adhering to its typical seasonal trends. And I would say that looking at the pivot analysis at the end of this month going into next month, interesting, on an anticipated pivot area, this level around 79, 78, let's call it, in this area, if it happens in, say, late November, I would be very suspect that the market would see much further downside in this area. So it's very, if you just filled in the blank, is it possible for the market to maintain kind of like this type of trend in the market going into December? And the answer is absolutely. So, we've been back down to the 78 level, and it's certainly plausible to see in normal market conditions that we get a retracement, a further retracement in crude oil. So I wouldn't be too hasty, let me say, I'm not going to be too hasty to buy oil or refineries right now. I'm looking for crude oil to move a little bit lower still, both in price and in time. And see, and that's the key of one of the values that I think is most often overlooked with seasonal analysis. It will help you in timing not your entry, but also your exits. Many times you sit around in a trade, and for those who can let their trades run for a while, sometimes traders, the small speculator is not, I don't think the small speculator's a bad analyst. They just haven't refined their trading techniques. They may stay around a little bit more than they're welcome in a trade and therefore give up some of their profits thinking that the market's going to continue on forever. I think one of the greatest neat things about seasonal analysis, it'll give you an idea of what the typical cycle or what the typical trend of a market move has been from a past historic standpoint. So that, my friends, I think is another real benefit to using seasonal analysis that's fairly overlooked by the masses. So looking at natural gas, for example, and I'm not sure, natural gas has been on such the decline. We can go over here and let me just share with you the natural gas. So since we've seen the market kind of bottom out, we've got this 1, 2, 3 bottom. You've had this pullback. Some people might call this the beginnings of an Elliott wave formation. But typically what concerns me is that the market kind of sees this rally, 1026, and boy, that's about right where we are right now. So typically there is a market from about the first week of September that goes up, and boy, here it is from about the first week of September. it goes down, and the trend was down. The market has a little downtrend, it has a little uptrend, so a downtrend, uptrend. This market has really been adhering to its past seasonal tendencies very well since this big decline. So it's starting to work in its seasonal trend tendency. So that tells me we might get a little bit of a pullback going into the middle of November within a slight move to the upside, but then keep this in mind. From on about the middle of December going into about the middle of February, that's about the worst time to be in natural gas. So if you are in natural gas or you get long natural gas, and there's a lot of stock traders that like UNG, might be in the natural gas space, for example, or stocks, you know, using this seasonal tendency, the rules that I just mentioned, a market that has been in recent history, has been in gear or in sync with its typical seasonal trend tendencies, tends to remain in its seasonal trend tendencies unless some type of event alters the immediate supply and demand outlay. So with that said, I think it's certainly an advantageous tool that may help you as a trader to determine whether or not you've maybe extended your welcome in that particular trade. So again, the best time right there, middle of February, stronger trend coming in to be long the natural gas. So if we start to sell off in November and you think it's a buying opportunity, just remember by about the middle to the end of December, this thing does not do well in the natural gas. So keep that in mind. It's kind of like, if you notice, the opposite of crude oil. All right? So Zoltan Tolth, you know that name, your name rings a bell. We've seen you here before, Zoltan. And yes, we do have a big storm. I'm actually down here in North Palm Beach right now, Florida. It's a little windy, and we got this little rainstorm, but it, you know, coming from Chicago, we get these little, you know, Chicago, the windy city. We're not expecting the hurricane to come on shore here to Florida, but it's a Cat 1 or 2 right around there. So it's raining. Eamon Walsh, you're up there in Stewart. Yeah, it's just coming in waves. So we get these little bands, and that's about it. So in any event, other sectors and stocks that I want to go over tonight, which I wanted to cover some of the main markets that start to either enter or exit their seasonal bottoms and tops. Okay, so one of the things that it's interesting is that the semiconductor, I mean the NASDAQ, and I think I just shared the NASDAQ with looking at the market internals with everyone. If you and I'll go back to that in just a second. But you know, part of the technology space, the semiconductors have actually gotten just berated. I mean, everyone's buying, well, not everyone, but I mean, obviously Apple sold a few iPads in their report, but didn't pass expectations. But I think that'll be short-lived, because I think that was about it for Apple, and we'll go over that in just a moment. The NASDAQ, as far as we could see, in fact, let me share that with you right now again. So here we have this decline in the market, and an area that seems to be of interest is an area. Again, it's not an exact science, all right, but an area. Now I've identified this area of old lows right here, right? This old high, the market broke out above it, it acted as support, it blew through it, then it came back up and acted as resistance once, twice, 3, 4, 5, and it finally closed back above that. And now we're coming back to that swing level, let's call it 26, 25 area. 26, let's just go 26 even just for simple math. 26 even for simple math. So that the market's down here at 26 even. And the interesting point is that we want to see if the amount of stocks going down is it going down on heavy volume? So we ask ourselves, gee, the last time the market was at this level was right here. So let's take our crosshairs and examine at the last time the market was at this closing price was right about here. So in the advanced decline levels, we are lower. So more stocks have gone down since that time. But look at the volume level. Look at the on-balance volume. All right? So this is where we were with the on-balance volume. So the decline that we've seen is not on participating on heavier volume. If we took out that level, that same level in volume as price was at back here, then I would have to say this market has got more downside action to it. But the way the market's been declining on light volume, I'd have to say, the funny thing about in my 30 years experience, when a stock market wants to go down, man, it does not wait to take names and take confirmation and get you seated right away. It just goes down. And that's the way the markets work. It's like a rush for the exit door. But this has been a fairly orderly decline. And so one of the things that I have to say is that when we take a look at the different sectors, and that's what's important here, is looking at what else is in besides Apple, what else is in this space. And we take a look at the semiconductors. And when we take a look at the semiconductor, notice that towards the 3rd to 4th week of October typically is the seasonal time for when we see the semi-space, the semiconductor sector, the semis bottom out. And to me, I think that's kind of an interesting situation because many people, I don't know, you've probably heard about Intel, and one of the things that we reminded some of our students the other day was AMD, Advanced Micro Devices. They're kind of like they're the company that allows Intel not to be a monopoly, right? I mean, AMD is like a $2 stock right now, folks. So when we take a look at the semis, we say, okay, what I'd like to do, since this is, and this is the key, since this is now the seasonal time for this sector, and I don't know how many people have been hearing about the semiconductors on the news, but I bet you it's not on the news right now. Everyone's going to be talking about Apple and Amazon, maybe eBay, some of the, the consumer buying ports, Amazon for holiday shopping. We probably heard about Best Buy getting cracked today, all those kind of names because those are the big movers. So no one talks about the stocks that are getting ready to move. Most time the news talks about something that's already happened. And what's neat about using seasonal analysis, it gets us ready to get into a market before the thing moves. And so what we like to do is scan for some opportunities and look for stocks in a particular sector. So one of the things that we do is, and I'm going to switch this back over here. Here we have ran a scan. So today we take a look at long stocks, right? So in the JP long stocks, we come up with LSI. And so take a look up here. LSI Logic Corporation. At the very top, it tells me exactly what it is. It's in the semiconductor space. Well, that's kind of interesting. Does this particular stock, is it match up with its overall index trend? So it's kind of like a top-down approach. I look at the sector and I look at a stock to see if that stock adheres to the sector, because sometimes not all stocks are disconnected. It's kind of like if you look at the XLF, the financial sector. In the XLF, you've got the CME group as a financial, and it's really an exchange, right? A derivative exchange at that. So it's not, to me, when you talk about the financials, you think of like Wells Fargo, the banks, et cetera, maybe a credit card company, something like that. You don't think of a commodity exchange as the financials, but yet here CME is in the XLF, the exchange traded fund on the financials. So I like to do, as I said, to see if this actual stock does pin or compare well to the overall sector. So today, by the way, while the whole world was declining, LSI actually had a pop on a buy signal. Now, the way I've got my chart set up is I have a daily chart to the far right, I have a weekly chart in the middle, and then I have a monthly chart so that I could take a look at, in order to figure out where the market might go, I like to ask myself, where's the market been? And one of the things about LSI, and we'll probably be talking about this tomorrow in the trading room, is that if we take a look at this weekly chart, and I know there's going to be some students right now that say, aha, benchmark. So here we had LSI with this benchmark breakout on a weekly buy mode. The market just, I mean, take a look at this stock. Look at the ranges between the open and close relationship, very narrow compared to this one tall green pillar of strength. All right, so you take a look at this candle, and actually the midpoint has been offering some tremendous support. So finally, the market's coming into a time period where it actually declines. It has a little uptrend, and it had an uptrend, and then it goes through a period of a downtrend, and it gave it back, not all of it, and now we enter in seasonally strong period of time. So, in fact, if you take a look at this chart, last week we actually formed a doji on a weekly basis. So we have a possibility of making a weekly high close doji, and for some of you who know my work in the audience, you notice that this green line, this green horizontal line, is the person's predicted pivot monthly support target. So the market's actually come down to its monthly support, and here's another little thing that we want to quantify this rally. Was the rally on decent volume? And actually, yes it was, because look, we broke out to the upside and the on-balance volume exploded. So we're in a seasonal strong period of time. We came in a longer-term support of the midpoint of that benchmark, and LSI will be on my radar list. It's a $6 stock. What can we expect this thing to get to? Well, what can we expect it to get to? Where's the stock been? Well, if it ever gets back up, at least, as you can see, the intermediate term trend since '09 has been up, and it's probably, you know, not going to see the highs, and I'm going to go to a longer term chart. I doubt we're going to see $90 on this stock because of the change of products from PC makers to Notepad to Apple products, for example. But I think that at least coming back to test, I mean, from a reasonable perspective, in a seasonally strong period of time, this stock certainly is developing a low-risk, decent reward opportunity in this space, in semiconductors. I also promised, I talked about AMD, and here's AMD. It's also semiconductors. It's in that space, and it's a $2 stock. It's almost at, as you can see here, I mean, for gosh sakes, 100 shares of AMD is kind of like going to a bad restaurant for $4 and ordering a bottle of wine. You know, if you get a reasonable signal to buy, I think at the very least, here's AMD that if it just comes back to its breakout of around 350, you know, it seems to be a reasonable buy. So I'm looking for a lot of the semis right now, the semiconductor space, to start tripping off some buy signals, believe it or not, because in the semiconductor space, this is a sector that's under the radar. No one's really looking at it. It's gotten beaten up beyond belief. And here's the key. Technology starts to move, so the macro sector starts to move. And, you know, people might put some money to work in small cap stocks. You can't get much smaller cap than a $2 stock, so, or a $6 stock. Now, I think that is a couple areas that we could start to focus in on as a group. And when we look for scans, many of you might be familiar with some of my work. If you've bought my books before, you know my proprietary setup with the high close and the low close doji. And, you know, there's nothing more powerful than a high close doji at monthly support for me in my work. I mean, those are some real important setups for me. And after long declines, if we get a setup in stocks, I'm going to be scanning for high close doji setups. For at least in these particular sectors. So when we talk about scans, there's certain things that we're going to be looking for. Number one, obviously, we're going to be checking out semis in the next few days and weeks ahead. Now, gold. Now, I don't know. We've got some Thinkorswim clients, I'm sure, here. Back on July 25th, if you go back and look at the seminars, and also something we've talked about to our group, I did a presentation at Thinkorswim, and I gave this whole thing about seasonalities on gold, and I said, listen, if you don't like the gold, we look at GDX, and if you don't like GDX, here's a top-down approach. We had Anaco Eagle Mine, which looked like a very strong stock, at least from the chart pattern, compared to Barrick Mine or Newmont Mine. And, you know, typically you see gold bottom out in July, and it rallies going into October, and Octobers are traditionally a very bad month for gold. Last year, gold peaked out, actually, in late September at $1,927 an ounce. It proceeded to decline back to $1,500. Many people forget that. I mean, in 2008, gold actually made a 30% correction in 2 days, going from 900 and change to 600 and change. This year's no different. Gold had a nice little pullback. We actually had our sell-off, and this is one of the trades why we actually pulled off and looked at and did the 172, 170, and in hindsight, I probably wish I'd done a different strategy and been more directional, but you know, it made some money. Using seasonal analysis and looking at a market that makes, like you can see gold here making a higher high. Gold made a higher high, but it didn't do so on any accumulated volume. So this was telling me it was kind of a weak high. And then from a seasonal perspective, typically gold goes down on a seasonal tendency. Now the question begs, where can gold go to? And I think somewhere, you know, we're in an area that gold will probably support. We've got a very accommodative Fed here. We have a very accommodative central bank in Europe. And so I'm not all that bearish right now on gold. Meanwhile, because gold typically bottoms out, maybe we got a little bit more to go, but I'll be looking for some buying opportunity in gold as we press near this old support resistance zone. So that's what kind of the area that I'm looking at to do business in the gold market. So another sector that I don't think is really on anyone's minds except for Mitt Romney in the debate said, you know, we've got to help the regional banks, not the big banks, but the regional banks. And he also mentioned a word called coal, clean-burning coal. As soon as he said clean-burning coal, the very next day I tweeted, hey, folks, take a look at Arch Coal, ACI. Well, I mean, it was one of those ACI Arch Coal. It was, there's the symbol, ACI. You know, as soon as I tweeted it, the thing was just, you know, it was off to the races. It exploded. Apparently, I wasn't the only one that was paying attention. But regional banks is the one space. It's interesting because no one's giving this sector any type of look. But with where interest rates are, if we do see a recovery, housing, things start to get a little bit better, or the perception. It's the small bank or the regional bank sector that might catch a little bid, and typically right around the middle of November, all right, that's when we see this space kind of bottom out. So this is a kind of an idea I want you to keep an eye on, number one. The KRX is the Regional Banking Index. You might not want to invest in this space or look at regional banks, but I'll be scanning for, you know, some of the smaller banks, your Susquehannas, your H-bands, and things of that nature, because they're low cap stocks. Now remember the theme. And this is what I want to get back to. Remember the theme that small cap stocks, the January effect. Someone said, I saw someone type in, hey, I don't like to do spreads, or they're complicated, or I don't do spreads. I appreciate that, but take what I'm telling you and put it just to one notch higher. People put money to work in small cap. So who said they had to do a small cap spread? Why not look at small cap stocks? We're looking at seasonal strong sectors. Why not look at seasonal strong sectors within the small cap? If small cap outperforms large cap, wouldn't you want to be in the small cap sector space, such as the maybe regional banks? So take a look at some of those stocks by the middle of November, along with some of the semiconductors. And again, we'll be scanning for some of those banks, and we got to just change up. In fact, Let me go over here. In fact, here is just to introduce to you, for those that have my scanners and do have Genesis, we've just spent, I don't know how long, perfecting the scanner for high close and low close dojis on stocks, commodities, forex, and different time frames. So probably one of the most powerful signals that I like to see are high close dojis. Sometimes they're hard to see. You know, they're hard to see in the fact that a doji forms after a doji. But the fact is that after a long decline and you get this doji, when you get the market closing above the high of the doji, you get a high close doji pop in the marketplace. So I'll be looking for and scanning not just for daily PPS buy signals, but more importantly, generally speaking, the high close doji will give you a signal before my PPS indicators will, hands down, 1 to 2 time periods earlier. And so looking at the space, how we break this down, in fact, Schwab generated a high close doji, and it's kind of interesting because one of the other spaces that we look to be a buyer that's seasonally strong is in the broker dealers. You know, if the stock market generates more business in the fourth quarter, more people are trading in the market, fiscal year end, et cetera, there's more, the exchanges start doing more transaction, and so do brokerage firms. So the broker-dealer index is another sector that we look at, and Schwab's certainly a good, I'm not saying to go out and invest in this for the next 20 years, but it's certainly a seasonal trade that if you take a look at a seasonal trend, you'll notice that this is a stock that you can be in for at least 3 months. So again, seasonal analysis will help us to determine the length of stay in the trade, whether we're over-invited or understaying the trend. So bottom line is the high close doji as well as the low close doji. When I'm entering a seasonally strong period of time, I'm looking for buy signals. But remember, my indicator might be a few bars later than a high close doji setup. So we'll be scanning for the high close doji. And the way we've set this up, which is really, really cool, is we have the high close doji. And so you can see I got 30 symbols. So all I've done is I've broken it down to the different sectors so I can tell immediately what are the stocks out of that whole list and what sector they are. Consumer discretionary, consumer staples, energy, looking at the financials, looking at healthcare, the industrials. I mean, you got a lot of nice buy signals, Roper Industry, looking at rider systems, for example. And what I could do is I could say, well, gee, my rules state that after a market decline, you see, to me, not all the signals are going to be great. To me, this is a high close doji worthy of taking. This is not worth taking because it's after a rally. So I can immediately say, gee, it's in the industrial space first off, and it's not within my rules. I can move on. So this is a really cool scanning feature. The materials, nothing came up, utilities, and again, we have all the low close doji stocks that came up. So if I start to scan the stocks, all I need is the trigger to get me in. Every day I run the scan for high close doji and run for buy signals and pop up because I can't set alerts on price. What if the market just trades and crashes back down? I need to set a scan for condition, if that makes sense. So the high close and the low close doji scans have been completed, and when we get into looking for regional banks, for example, I will be setting these instead of the as I can just share with you right now. See where it says S&P 500? The neat thing is I can come on down here and I can change this to scan within the Russell 1000. I can scan within the Russell 2000, 3000, 100, S&P 400. I can scan forever I want now that we've written the code for the criteria, which is really, really cool for trading opportunities. So now it's just a matter of what strategies do I want to employ. So A, by doing seasonal analysis, I can lay out how much capital I want it to outlay. Here's another sector, the retail sector, the XRT. Notice that, XRT starts to decline from about September. Remember, we see a little increase from July. So people go back to school, they start to buy, and then the market starts to come down. And right now, the XRT has been adhering, it's in gear with its seasonal trend. So I want to pay attention to this right after the elections, around the middle of November, that if we see a pullback, probably, I'm going to say somewhere down in that zone right there, right, against these old highs right in there, that swing area, and it's probably about a, what do you think, 50% correction of this whole leg up. So if you get a 50% or maybe a 618 retracement somewhere near, the November anticipated pivot support, I'm going to bet that I'll be looking for stocks within that sector as well, and I can scan for them. Now, here are some of the component stocks in XRT, just to help you out. You got O'Reilly Automotive, Ann Taylor, the Children's Place PLCE, J.C. Penney. Gee, folks, J.C. Penney's in the XRT. What is J.C. Penney? A department store. On the lookout for Macy's, Nordstrom's, etc., etc. AutoNation, Family Dollar, AutoZone, Sears. Maybe I'll be looking at, and I know everyone's going to kill me right now, I've been talking about watching Best Buy, because I think the lower it goes, the greater the opportunity it is, because I don't think they're going out of business. They've just gotten hit with all the bad news. I think there's a lot of capitulation, and I think that there's going to be a buying opportunity. People sell out their losses now, take that tax credit, sell those losses out. But I think Best Buy is going to be a surprise, because people will be shopping at Best Buy. It's a seasonal trade. It's not an investment. It's a seasonal trade. So we'll be looking at the components of XRT, and I'll be looking for Best Buy as well. I look for Sears, and another one of my favorite I think is going to do real well at the holidays. This is my holiday shopping list, Costco. So I can't buy thousands of shares of each one of these companies, but what I can do is options strategies to diversify in the products that I'm in and the types of strategies and stocks that I'm in. And I can help time it by looking at the seasonality of the markets. So coming to a conclusion here, there's another one here, Internet, the IIX. Now here's an interesting note. The IIX starts to bottom out right now. And this is where we start to see a time frame where we buy into this space. Now, there is a gap of unfinished business down in here. And I don't know if I drew that exactly, but you get the idea. Somewhere in here, if I could draw that correctly, somewhere in here, between the value that we see in the next couple days, somewhere right in here, that I want to be looking to be a buyer of this market when I get a signal. Or what I want to do is look for stocks in that sector. So I've listed some for you. By the way, look at this. Apple, Analog Devices, Amazon, Dell, eBay. eBay might be a fairly decent stock to pay attention to, and it's probably, I would like to see it trade a little bit lower, and I'd certainly like to see, with the way Apple's probably going to come off tomorrow, Google, IBM, Oracle, Visa. People use their credit card during the holidays. So these are some of the changes. In fact, if you take a look, and I'm going to do this with you right now, take a look at Visa. Market ran up, it pulled back. Now let's take a look at eBay real quick. All right. Market rallied, it pulled back. So it's almost in gear. These two companies that are in that sector are almost in gear. They have a kind of a strong beta to the overall sector. So what I will be doing is scanning for the buy signals for some of these stocks going into the next few weeks. So the question is, Apple, is it time to buy or bite? We did this for our class where we shared everyone that we had this like head and shoulder formation. The measurement from the head down to the neckline actually did project a measurement down to this level. This chart is exactly from our my charts from the other day. In fact, we even talked about in the trading room today that we had a bearish triangle that would measure and project down to around 585. Now in after hours we hit 585.10 and we traded back up. So I think that another thing to notice that back on July 27th we had a gap. So technically we filled a gap in the market. The market's gone from over $700 to 585 technically. Someone was able to pick it up down there, not you and I, of course. But nonetheless, I think that, as you can see, this is coming a little bit late, but it is in a bottoming of a seasonal tendency. And typically, I would be more probably prone to see Apple come back up to, at the very least, test the high. Maybe not take it out, but test the high somewhere in this zone between 650 and 700 as we go through this seasonally strong period. So that, my friends, is something that we're doing. And I'd like to offer, just as a reminder, if you're interested in Trade Navigator or you have Trade Navigator and you want to try this high close, low close doji scan, they are finally available. It's just $197 one-time fee. That's all it is. The first 10 subscribers, we're even going to send you out our Commodity Traders Almanac, but the 2013, which includes seasonalities. So my son John will give you the details on that. But more importantly, everybody, I want to invite everybody to our open house. Come back tomorrow morning and for next week. So here's the schedule of events. Here's what we're going to be doing. We're going to go over what we talked about tonight. We're going to see how we trade with our indicators on some of this, as well as day trading E-minis with my partner, Butch Heading. The next thing we're going to do is that every Monday I do what's called planning and scanning, where for our clients, for our group of community, we go through and share what stocks popped up on the radar screen and what kind of looks nice. Okay? So, if you want to come in, just log in tomorrow, number one, and Monday at 8 a.m. Central. So that's a half hour before the markets. We'll talk about planning and scanning, what stocks, what sectors look good, what popped up on our radar screen. Earnings coming out for Monday. Leggett and Platt, for example, we have a few coming out. We've got some economic numbers that might give us some type of volatility in the market. I think, for example, we have full moon on not that I'm saying there's full moon reversals on in the markets, but Monday is at full moon. We have personal income that I believe is coming out. Then, of course, we have on Tuesday, we have JDS Uniphase, Ford. We also have our Part 2 webinar, and that will take place 7:30 in the morning. So this was Part 1. Part 2 is 7:30 in the morning. Wednesday, the last day of the month, and it's also Halloween. We've got Visa and MasterCard, Allstate for earnings. Thursday, the weekly jobs report, Exxon, Starbucks. We also have Watson Pharmaceutical, WPI coming out. Friday, big number, monthly jobs report, and we have Chevron and Beam coming out for earnings. So there's something here for everyone. You're invited to stay with us for the week, learn how our indicators work, see how we trade, how we practice discipline, put things in perspective, join our community if you've never joined before. So if you've never been here before, we invite you to come stay with us. If you're interested in finding out more about our the indicators and the scanners on Genesis, you certainly click on the link. And that concludes our session tonight. If you have questions that we need, let's get to them now.
Dad, can I interject here? Okay, folks, I want to, if you don't mind, Dad, I wanted to, if I can briefly take over for a second.
It's all yours. Go for it.
All right, folks. Here, I'm going to actually, great, thanks. I'm actually in the process, I'm going to stop you here from projecting. Hang on, folks, I go ahead and pull up my screen here. So simply to to go ahead and take advantage of this pre-launch offer, let me see here. All you simply need to do, what I'm on right now is I'm on our website at personsplanet.com. And if you see here where it says software and indicators, simply go to Trade Navigator. And if you look right down here, it says John Person Doji Scanner. So simply click Add to Shopping Cart. Fill out the information. The total again would be a one-time fee of $197. You're going to receive the high close, low close Doji scanner for Trade Navigator. So for those individuals that have our indicators or the stock scanner, it's just an add-on. For those individuals that are looking to